You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune means it's time to get funky on the futures options side of the fence. Yes, it's time for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. You never know what we're going to break down each week. You know, you might have a guess this week was lighting up everybody's tapes. And, of course, if you want to play along with the home game, cmegroup.com/TWIFO. TWIFO is the place to go. You can generate these reports for yourself while you're listening live. You can see what we're talking about after the fact. That link is always live, listeners. So everyone was asking, can I generate those reports at 2 in the morning if I want? Yes, you can. Head on over there, cmegroup.com/TWIFO. It's the best place to start your journey. Then you can do it while you're listening, which is always fun as well. So if you want to see a product we don't have time to discuss on the show, you can do it yourself. It's really cool. If you want to go check out lumber or fluid milk, whatever's floating your boat, you can do just that. And of course, however you listen to this program, whether it's live, whether it's after the fact, whether it's on a donkey cart, we allow it. Keep those questions coming. We know a lot of you have them these days. Maybe an all questions episode of TWIFO is on the docket. It's hard, though, because so many things are trading. We got to get to those as well. Otherwise, we could just fill the whole thing with your questions, because there are so many. But we'll get to all that. And joining me to help me break it down, it's been a little bit since we've had him on. Glad to have him back, our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO. How have your last couple of weeks been in this mad pandemic-fueled world, sir?
Good. Mark, thanks for having me on the show this week. I'm excited to be here like I am every time I'm on Options Insider. So thanks for having me. It's been a crazy couple of weeks, as you know, watching and trading and being in these markets. So look forward to having a great discussion today.
All right, Sean, you know what I'm going to ask you next. It's how we start the show every week. We run our movers and shakers reports. Again, you guys can see this for yourself as well. Head on over to cmegroup.com/TWIFO. Go into the market scans section. Hit the date button. Go back 1 week. And you can see this data for yourself. We have the dark side and the light side, Mr. Sean, of what's lighting up our tape. I will say, looking at this scan right now, this chart, it's a much more equilateral, evenly distributed chart than it has been in previous weeks. Pretty much every other week for the past month, it's been all red, it's been all green, it's been all red, it's been all dominated by one direction. This is the first time in about a month where I can remember this chart kind of being evenly distributed, which I can't say we're back to normal by any means because the broad macro trends are not really supporting that, but perhaps at least for the near term in the market, maybe we've reached an interesting little equilibrium. So, Mr. Sean, you know what I'm going to ask you. Where should we start, the dark side or the light side?
You know, I have to say I'm usually a half full guy, right? I think historically, but for the last several weeks, I've gone dark side for pretty good reasons. But there's light at the end of the tunnel. I think with this virus scenario we're going through. So I'm going light side. I'm going half full today.
I would expect nothing less from you, sir. You're our resident optimist. I can't get Uncle Mike on the option block on to be my resident optimist. You're my go-to optimist there as well. Let's break it down. The top 5 movers and shakers. Again, this is just raw net futures movement on the week, listeners. This isn't change in volatility or skew or open interest, anything like that. This is just straight up what's moving and shaking here this week over there on Globex land. And it's all on Globex now. It's all 100% electronic. So makes it even more interesting. All right. Bottom, number 5 of our top 5 here to the light side is the NASDAQ, up 6.04%. We got a weird bifurcated market in the equity space, listeners. We'll get to that in a little bit. Number 4, platinum, up 7.25%. Number 3, feeder cattle, up 8.09%. Number 2, the Leviathan in our midst out there, Eurodollars, 11.39% to the upside. And number 1 with a bullet this week, listeners, we've got our old friend RBOB Gas, up 15.5%. So a crazy week for a good old RBOB. I got a feeling there's going to be some energy to the dark side there too. Let's go dark side now. Number 5, which I guess is where you want to be. If you got to be in the bottom 5, number 5 is where you want to be. That's the S&P mid cap, off about 5.75%. Number 4. Old friend, Class 3 milk popping up there again. I think we have a question about that a little bit later as well. Class 3 milk off 6.16%. Number 3, a little index you may have heard of called the Russell 2000 off 6.83%. So you got NASDAQ 100 up 6.04% and the Russell 2000 off 6.83%. Talk about just a crazy market that we're in right now. Number 2, lean hogs. Talked about them a little bit on the show recently, off 8.32% again this week. And number 1 with a bullet to the dark side this week, listeners, you can probably guess what I'm going to say. Yeah, it's the one everyone's talking about. WTI off 12.25%. So just if you're playing along with the home game, we had record production cuts and yet off 12% yet again. This kind of reinforces the narrative. We were saying on the show last week, the call wing was not supporting this move. No one was buying into it. They were fading it yet again, and the skew was reflecting that. And here we are again this week, with pretty much the same deal playing out there with off 12%. We'll get to that in a bit. We got to start there because that's where everyone's focus is. Before we get to that, numbers coming out of our friends over there in CME land for March. Now, we touched on some of this before. We have it broken down by category now, which is a little bit more interesting, I think. Overall, ADV in March, almost 6.3 million contracts. That's up 54%. From a year ago. The rates were the biggest driver of that. They were about 4.26 of that 6.3 million, so up about 45% in rates volume. Our old friend Eurodollars attributing to the lion's share of that. Equities right behind it, they were about 1.2 million. That's up 103% from last year. And let's see. They have percents of Globex on that, how much was executed on Globex. That's an antiquated stat now. It's all Globex going forward for the time being. So that shows how much our world has changed, even since March when this report was going up. Energy up, 395,000 contracts, up 126%. Ags and FX, kind of the lone kind of holdouts out there, not really lighting it up. Ags, 272,000 contracts, up 4%. FX, 60,000 contracts, up 2%. In the middle there, we've got metals at 111,000 contracts, up a whopping 57%. That ADV, if you're wanting listeners, is pretty much, it's a new record. It's right above a little bit where we peaked out for back in the Volmageddon back in February 2018. So the ADV spiked up there, and then it kind of fell off again. Right now, it's back up there again. We'll see if it can maintain those levels out there. We've got to kick it off in energy. You guys know the drill. Head on over to that TWIFO report. Head on into energy. Choose WTI. And then you could see what I'm looking at right now. I like to hit select all. You guys can pick your poison there. It might be even Nick, who created the software, says it's too much for him sometimes. So to each their own out there in terms of what we're seeing out there in WTI. By the way, just some other nuggets coming out of that March report here. WTI volume ADV in March was 204,000 contracts. That's up 109%. From this time last year. So crazy time. But the weeklies were, this gives you a sense of, we talked about this before, why does no one trade the weeklies? The weeklies had an ADV of 4,900 contracts. That's still up 93%. So more people are trading the weeklies, but there's still nobody trades them. Let's see. We'll get to nat gas stuff in a little bit. But interesting stuff here. They also, in that report, they had some analysis of what's going on out there. Volatility levels in WTI higher than any benchmark commodity market in the past 10 years. This chart going back to 2011. Yeah, they're not seeing levels like this. WTI, we said it before, it's more of a volatility instrument than you maybe would assume, particularly now that is coming into place. They also talk about things we talk about on this show all the time, pricing in extended vol, 6 and 12 months out, and downside puts. Trading at a record premium compared to the calls. OI also building strongly in some pretty ridiculously out-of-the-money strikes. We talked about the 10 puts trading on the show last week. So this report kind of reinforcing what we were talking about out there last week. Coming into this week, like we mentioned, on last show we were talking about the rumors of this around 10 million barrels a day production cut. The market was kind of digesting that. It wasn't official until the weekend, but still, it was a lot of rumors what was going on. And it seemed like even with that number out there, the call skew was fading that move. We saw exactly that play out over the course of this past week. And now here we are, just a few days after, again, the largest production cut in history. And we're seeing WTI back below $20 a barrel. And again, a lot of this is because the demand, even though we're cutting 10 million barrels a day, which even at that level, people are wondering if that's sustainable, if that's nowhere near enough to make up for the demand annihilation. The IEA, the International Energy Agency, coming out with their expectations for demand for April. They expect, so again, we're cutting 10 million barrels a day. They expect demand to be down by 29 million barrels a day, according to their forecasts. They say, according to their report, global economy is under pressure in ways not seen since the Great Depression. Businesses are failing. Unemployment is surging. Even assuming the travel restrictions are eased in the second half of the year, we expect global oil demand will fall. That's, again, for the year as well. So they're not expecting any sort of bloom on this rose anytime soon. The notion of this V-shaped recovery everyone's talking about, at least IEA, saying not going to happen anytime soon. And of course, if we're annihilating 30 million barrels worth of demand a day, 10 million, it's just a drop in the bucket. It's nowhere close enough to make it happen. And it's even arguable whether they can sustain the 10 million. So that's why we've pretty much been getting annihilated out there in the crude space ever since. Let's look at the report here and see where the action was this week. It was out in June. Coming at Showtime, we're at about a 1987 right now in WTI, listeners, by the way. And June accounted for 33% of the paper here this week. The big print, again, we're shy of that 20 handle right now. And it looks like the 20 puts in June were, actually, I take that back, the 20 puts in April. So these ones are a little bit closer to home. Actually, these are May. These are May, expiring in, where are we? Here we go. These are expiring pretty much as you hear this, any minute now. These puts are going out. So again, people will trade near duration contracts going out very soon, just not in a listed weekly. We've talked about it before many times. I don't know the answer to it. I've asked many people the answer to this question. No one really seems to have the answer out there. So it is the 20 puts here in May going out today that were the big dog, 23,000, almost 500 going up this week. If you're wondering, by the way, that contract accounting for about 25% of the paper out here. And then we got number two out here, the 20 puts in June, doing about 22,000 500 out here. So this was the most active month, the June contract. Let's see here. Outside of that, we've got 25 puts, about 14,000. It's pretty much all puts all the time here, listeners. And we go out to 25 puts in July with about 13,000 there as well. So downside and in the money puts were kind of the order of the day here this week. Not exactly surprising given the price action that we saw out here. Coming into right now, we're seeing the vol actually off a little bit, but saying it's off, it's still absurdly high. We're at 112 and a quarter in this June contract, listeners out here. So it's off about 2.5 points, but it's still ridiculously volatile. Again, going back to that CME report, it's higher than any benchmark commodity has been in pretty much the past decade. So put that in your analysis machine out there, your models. Looking at the skew out here last week, kind of mentioned that report mentioning the puts were bid. Last week, the puts were 14.6% rich to the at the money. This week, that has increased. They are now nearly 22% rich, 21.8 to be precise. And the calls were 11.3% cheap this week, 13.9% cheap. So again, if you were looking to that volatility skew in WTI to perhaps point you to a ray of light, if you are a bull saying, you know, maybe at this point, 20 is the inflection point where people will start buying this thing, where people will start buying calls. They will stop fading this sell-off to the downside. We are not seeing that reflected in any of this data out here so far. It's all puts, lighten up the tape. It's all puts all the time. We're breaking to the downside. Vol in a little bit, but not a ton. Remember, and if you go farther out, if you go beyond June, vol is actually up. So longer term, they're bidding up this vol, actually. So the near term's coming in. Not surprising. We had the big event of the OPEC meeting out here over the course of this past week. So that's why some of that vol is coming off. But you get beyond June, vol is ticking up again. So very volatile beast out there in WTI. Sean, I know you're an equities guy. Crude, not exactly where you hang your hat most of these days, but it's hard to ignore the crude story right now. It's insanity, however you look at it. I mean, whoever would have predicted, not in the pandemic perhaps was potential to be predicted, but on top of that, this price war to the downside that exacerbated the sell-off in crude, and now on top of it, this demand annihilation that has happened from every pretty much industry that consumes crude being effectively locked down for the foreseeable future. So I know, Sean, this is not exactly where you hang your hat, but I think even you have to be watching these numbers these days. Are you surprised that just even at these levels, at south of 20, the biggest production cut in history, WTI still can't catch a bid, Sean?
You know, it's fundamental economics, right? It's the law of supply and demand, and price will move with demand. And yeah, when there's no demand, the price will drop. And we're like at an incredible price of $20 a barrel. And like, it's surprising, but again, we are at a historic level with this crisis going on. It's just incredible to see.
Yeah, it is incredible, and people might be saying, hey, well, that's at least I could feel that in the pump, but no one can go anywhere right now, so you're not even getting a chance to really feel it in the pump these days. Let's see. Yeah, let's get our RBOB as well. Let's go to RBOB so we can talk nat gas as well. So really quick, RBOB is not one we get to talk about a lot here on the show for a variety of reasons. It's not a huge option story, but it's leading the upside here this week. Let's see how many contracts we had. Oh, a whopping 1,700. Again, that's why RBOB not usually leading the show out here this week. By the way, if you wanted that future at 0.71 out there right now. The big print in RBOB this week are the 1.05 puts out here in, let's see, where are we here? These are in October, going up 600 times. So that's a pretty big print. That's more than a third of the paper they had all week going up in these crazy, pretty far out of the money October puts. So again, people write in asking about RBOB. There's a reason why. Even though it is up 15.5%, there's a reason why we don't break it down the show because there isn't a lot going on from an options perspective. You know, there is a lot going on from a vol and a skew and a volatility perspective, and certainly you guys are lighting up our tapes about this, is, of course, all things going on in the equities right now. In fact, I just mentioned at the top of the show, we have the NASDAQ 100 to the upside. We have Russell 2000 annihilated to the downside. S&P kind of the weird Goldilocks in between. The Dow kind of languishing somewhere in the middle there as well. These are crazy times. Speaking of crazy times, Shaw, I know you guys and the team over there at FTSE have been doing yeoman's work there trying to aggregate a lot of the content and the analysis you guys have about the impact of this pandemic on the market. So let's start there. What are you guys seeing? Any interesting nuggets lighting up the FTSE coronavirus hub, sir, since we last talked?
It's, as you said, interesting times. And, in regards to small caps, it's just been, there's just lots of questions as to why it's so volatile. Why is it taking such a swing to the downside? And, the small caps, the Russell 2000, first we can talk about volumes. They've just been incredible, north of 225, 230, 250,000 average daily volume on CME and futures. Open interest continuing to grow, which is a very good indicator of confidence in the market from an investing and portfolio perspective. You've got Russell Micros trading at record volumes 2.5 times a year ago. Speaking of a year ago, next month, early May, is a 1-year anniversary of CME's launch of Russell Micros. So there's lots going on in the small cap space. But back to the performance of the index itself, small caps are less diversified in their stocks. The companies are less diversified in their products. So they are very susceptible to industry events and market downturns. You've also got a positive, and that's when the market turns around. Small caps are usually the leaders out of things like recessions. So there's negative strength, negative forces, but there's also positive forces. You've also got higher swings in earnings because of the fact that they're small companies. And right now, with these unemployment numbers that you heard today, jobless claims, these are U.S. domestic companies losing their employees filing for unemployment. That's a direct indicator of small businesses here in the United States, Russell small caps. So you're seeing these big swings. You're seeing this pop in volatility in small caps. So there's those factors. You've also got the weights within the Russell 2000 index, which is highly financials at the heaviest of the weight of the index. And, as there's speculation regarding the movement of interest rates, you had a big move in Eurodollars this week, as you said early in the meeting. That is dramatically affecting small caps as well. So you got a lot of moving parts within the small cap universe, making the products, making the index itself move a lot. But again, when it comes to derivative products like futures and options, it's very liquid. It's very tradable. The volumes are speaking for that. So the market is absorbing the ability for trading, investing, and the entire universe to get in and out of the market the way they want to and where they want to. So lots going on in small caps. It's a busy, crazy time.
Well, you mentioned lots going on, and you're right. I'm looking here at the numbers here for the Russell 2000 options going up on CME this week, and pretty active. We said it before. There are weird and interesting pockets of liquidity in the Russell 2000 that we don't necessarily see in a lot of the other indices. Part of that's probably because the Russell 2000 moves unlike all the other indices as we've seen for the better part of the last few months. And the most active contract out here right now seems to be the week 3 945 put, which is kind of in keeping. If you're wondering, listeners, the Russell 2000 at about 1161.5 right now. So again, it's kind of the similar story, a little bit out and pretty far out of the money puts are where the action was, and they're going up pretty much yesterday and today. Similar numbers yesterday and today. So maybe someone putting them on yesterday and taking them off. I don't know. Either way, someone active in the 945 puts also looks like a 965 1070. Interesting strikes. Both of those out of the money. Either way here, 622 times going up on Tuesday, that vertical as well. So maybe a bit of a roll or just putting on a little bit of an out-of-money vertical. So you got a vertical going up on Tuesday, and then Wednesday and today we see the 945 puts going up. So interesting. That's why I like looking at the Russell 2000, because there's always something interesting afoot out here. It's not just kind of the same slew of the same paper you're seeing week in, week out. The vol up about 6 handles out here in that week 3 May contract listeners that did about 36% of the paper out here. Let's look at the skew really quickly. The puts were bid last week, 15.3%. This week, they're more bid. They're about 20.1% bid. And the calls getting a little bit cheaper. The calls are 15.2% cheap this week, 16.2%. Calls coming in, puts getting pretty firmly bid, which kind of plays with what we're seeing out here with this sell-off going on out here of late. So small caps pretty active. You mentioned earlier, Sean, those Department of Labor numbers coming in, they were pretty apocalyptic. The only thing that made them seem less so was the fact that they were not quite as apocalyptic as the ones we had last week, which shows the kind of weird market we find ourselves in today. More than 5 million new unemployment claims. On top of that, the horrific numbers coming out of the pandemic as they're changing the way they gauge the impact of the pandemic on the healthcare side as well. So all that kind of weighing under this new economic reality we're living in these days. At these numbers, if you fast forward them a little bit, they're thinking this could bake into about a 16% unemployment rate by July. Again, not the 20% people were guesstimating at the height of the madness, but still a level we haven't really seen since the Great Depression. So not exactly strong news, even though the market, again, today was kind of mixed. And for the whole week, we saw NASDAQ up, Russell 2000 down. Today, coming into the show, we had the markets mixed yet again. Coming into showtime, we had the VIX at about a 41. That puts it down, about 3/4 of a point from where it was this time last show. So not a lot going on net week to week on the VIX side. The VVIX, aka the volatility of volatility, at about a 133. That was down about 7 handles from our show last week. And our old friend, the RVX, a.k.a. the VIX of small caps, up 2.5. So, Sean, this is kind of reflecting that crazy bifurcated market. How long have we been talking about this VIX RVX spread? Forever, since you guys came on the show. We've been watching this, and it usually is around that 3.5 point spectrum. If it gets crazy wide, maybe 5.5 points. Coming into showtime, that spread, Sean, was at 14.5 points. So that just shows not only are small caps more volatile right now, they're on like another level, Sean, from a volatility perspective. Is this degree of this spread widening out, is this surprising you, A? And B, as you're out there talking to all these market participants out there, is this something that's maybe starting to trigger them a bit and say, hey, things are crazy out here, we need to do something?
No question. The historic levels and, the small caps volatility is just up and up. As large caps seem to calm down, they're kind of global in nature. Small caps are domestic in nature, and U.S. is showing some real negative numbers. So you're going to see this where you've got global calming down of markets versus domestic. You're seeing this bifurcation in the market, as you put it. So there is this a little bit of international in small caps, as lots of small cap stocks are suppliers for those big global companies, but it's kind of a derivative of. So the more this is domestic, the more you're going to see volatility here in small caps in the Russell 2000. And I think RVX is showing the numbers for that, as is the Russell 2000 performance right now. But again, light at the end of the tunnel is as we come out of these stressful times, you'll see small caps rebound quickly and strongly. Again, just bringing up the point that this is a tremendous trading opportunity index, and with the products out there at CME Group and SIBO, you can take advantage of these things.
Speaking of the numbers, CME broke down the numbers on the equity complex for them as well for March. Interesting, again, bifurcation as we saw the transition to fully electronic over the course of that month, because the E-mini is up 111% in March from this time last year. The quarterly is up 269%. The Monday, Wednesday, weekly is up about 90-odd% each. The end of month up a paltry 9%. But the big S&P options, which, as you know, had a pretty strong floor presence, are actually down on the month. On March, down 24%. So no love for the big boys. It's all about the E-minis out there. E-mini NASDAQ up 73% over the course of March. The E-mini Russell 2000, of course, up 32%. The Dow not feeling the love, only up 6%. So if you're wondering where all that action was out there, that's how it broke down in the equities. Sean, I will give you the choice of what we want to do next. So we have a lot of questions. We can get into those right away, or do you want to try to squeeze in another complex first? And if you do, where do you want to go next, sir?
I'm a big fan of helping people answer their questions. So let's take some questions, and then maybe you can pull another asset class out if you'd like. But I'm a big fan of answering our listeners' questions.
Yeah, the listeners got some cues, especially these days. I do like to squeeze more on these shows whenever possible. So let's do a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. I'm with you, Sean. I love hearing the listeners on, and they always usually suggest some interesting products to analyze here as well. So let's get to that. See how many of you can squeeze on the rest of the show here. First off, Options Selling Mentor. I guess they're listening live. They're saying, great program, Options and CME. Well, thank you. The love right back at you. This is we try to help you guys out in these times, give you some content, talk you off the ledge, at the very least, give you something to do and to listen to while you're stuck at home fretting about these here markets. So we like to break it down, and really no one's out there talking about the futures option side of the fence, so we took it upon ourselves to do just that. Glad you, Mr. or Mrs. Option Selling Mentor, and everyone else out there is hopefully, given your name, you like to harvest yield risk premium. Hopefully you're being judicious in how you're doing that right now. These can be dangerous times to just naked sell some premium, but glad you're enjoying the show at the very least. TTO says, I wish grains were doing more so you could discuss them on TWIFO. Yeah, I'm with you there, TTO. I agree that it's looking crazy. It looks like we're getting some issues with the live chat. I tell you what, Sean, I will give you a question. I'll come back to the grains in a minute. I'll give you two questions to mull into a little bit, then I'll go back and see if I can get the live chat going here again. Let's see. Optionimus, easy for me to say, wants to know, with all the market volatility this year, will the annual reconstitution by FTSE Russell still move forward in June? If so, do you anticipate more changes than usual this year? And also, B, why is RUT so volatile? Why don't you dig into those while I see what's going on with our live chat, sir?
Sure. Great question from your listener there. And I'm not even going to try to say his name or her name. Yes, Russell reconstitution calendar is out there. Rank day is coming up. It's May 8th. There's several steps along the way. Later in May, there's a query period where preliminary shares and free float information for the Russell 3000 is published. The add and delete lists are posted on June 5th. There's a lockdown period that begins on June 15th, and this all culminates on Recon Day, which will be June 26th, where Russell reconstitution is final after the close of the U.S. markets, and it's usually historically the busiest volume day at exchanges. So we'll see if that happens this year as well. In regards to the components, it's a procedure that we go through. We don't sway from the process and procedure in terms of methodology in calculating our indices and the constituents. So we're very cognizant of following that procedure, and it's why we have such strength in our benchmarks and assets under management, and why there's $16 trillion benchmark to FTSE Russell products globally. I couldn't comment on the constituents. It's part of that methodology that we follow. So we'll just see how things go on rank day. And if you have some questions at that point, I'm happy to answer them. Volatility. We talked about volatility earlier on the program as to why the Russell 2000 is so volatile. The components are heavy weighted in financials, and they're very interest rate. Interest rates are a big component within financials that cause them to move quite a bit. There's in the reasons I went over earlier in regards to small caps and the recent economic figures coming out with jobless claims. We're all looking at the biggest component of the U.S. market, and that's small companies. And again, the Russell 2000 are small cap stocks. So you're going to see a lot of this domestic information affecting small caps. And the Russell 2000 has reacted with those economic numbers in a big way. So you've got pressures to the downside within small caps, but as I mentioned earlier, as the light is being seen coming out of temporary recessions or recessions, small caps are usually the leader coming out of those. So you'll see small caps outperform to the upside in those times. So what you've got is you've got 2,000 stocks that move around a lot for a lot of different reasons, and that creates a very volatile index. I also mentioned that there's tremendous liquidity in the products of our partners' exchanges. So what that equates to is a tremendous trading opportunity for those that trade in liquid products. You've got those at CME Group, and you've got them within the RUT complex, RUT at CBOE. And it's just a tremendous opportunity to, one, trade the market, and two, you've got liquidity to be able to comfortably get in and out of those markets with the products at our partner exchanges. So I hope that answers your questions.
Well said, sir. I think there's more about Russell 2000, so keep your question answering pants on, sir. Really quickly, let me go back to this TTO comment here about the grains. I'll tell you what, TTO, I'll do you a solid here. I'll pull up one. Let's go to the wheat. How about that? I'll give you a little quick wheat rundown. Even though, like I said, in March, the ags were kind of one of the more quiet complexes out there from a volume and overall action perspective. Not a ton going on out there. But right now, this week, we're seeing the wheat at about 528 out here. Right now, we're seeing the most action, nearly half of that paper coming in this contract that's going out in about 8 days. So it's coming down to it here. Nearly half of the paper out here, which is about 102,000 contracts. So not a bad week out here, all things considered. The big print on the week are the 560 calls, so near-term out-of-the-money calls with about 5,000 spread out throughout the week. Most of that opening. So maybe a little bit back into the upside, maybe some overriding, harvesting of the old risk premium. Either way, that's where the action was. I don't normally look at skew with less than 2 weeks to go, but let's do it really quickly. The calls were the puts 1.4% rich this week. They're about 1% rich, so still bid to the puts. And the calls, though, they were 9% rich last week. This week, 4.3%. So even though there was opening paper on the 560s, I'm guessing there must have been some overriding then, because now it's gone from about 9% to about 4.3%. But then again, this is a weekly, so take all movements in skew with a huge grain of salt. Really touching, too, on JLC. Why is RUT so volatile? Remember, it's small caps out there right now. Small caps are where a lot of this whole movement in the economy, this has been like an atom bomb has gone off in the smaller businesses right now. So you'd expect a lot more movement in those names versus the large caps who might be somewhat more insulated from some of these shocks. So that's why we're seeing so much crazy volatility. I mean, small caps are just structurally, by nature, by definition, more volatile than large caps. But also, in general, right now, we're seeing a very small cap focused just damage in the economy, and that's driving a lot of this action. Genji3 wants to know, why do you do TWIFO 30 minutes after the option block program? Why not back-to-back? Thanks and love all that you do. 5 stars. Well, 5 stars back at you, Genji3. You're a 5-star listener in my book. You like a little bit of a behind-the-scenes question here. This actually goes back to, it seems like so long ago, listeners, but we used to actually have in-person, in-studio guests for shows like this and many others. Obviously not doing that right now, and don't see that happening again anytime soon. So we needed the time between the shows to reset the studio, to get things up, to go have the guests get brought up from the front desk of the lobby all the way up to the studio. There was a lot of logistics that went on behind the scenes. It's hard to just flip the button on the next show and keep going. I'm sure our live people would love that, and it'd make it nice for them to go from show to show. But we make sure they get a nice little dose of fun stuff in between the shows there. Speaking of the live, sounds like our Mixler having some issues out there right now, which is not surprising. Internet names having a lot of issues these days. So it seems like the live chat is down for the rest of the show. But, of course, you guys can always get the podcast after the fact. We love the questions you guys. You guys are very chatty in the chat today. We love seeing that. So keep that coming. But that's why we don't do the shows back-to-back. It's just a logistical thing. We have to reset the studio, get ready for the guests and things on our end. So just more of a logistical behind-the-scenes thing. And we continue it now just because it does make the transition between the shows a little easier. All right, Mo, this was a question that came in, Sean, actually, on our last show by the live chat. It was kind of interesting. I wanted to kind of put it to you. He asked if we thought the CBOE floor would be gone in the next year. And I said, probably not CBOE. If I had to guess, of the two, I would probably guess CME would be the one of those two that wouldn't return to their trading floor, more so than the CBOE, because CME for a while has been closing down the trading floor, and they obviously do a large and robust amount of their volume on Globex. So I'll put that question to you, Sean, but we'll flip the script a little bit. We'll change it to CME. Do you think, as Mulvey wants to know, you think the CME floor will be gone in the course of the next year? Or do you think they're coming back, Sean?
They're both coming back. I'm confident that there is a strong client base for price discovery and that high touch you get talking to a broker and liquidity providers that provide that liquidity in the open outcry. Not to mention complex transactions still need that high touch from a trading community. And I think that there's still a very strong desire for that liquidity and price discovery to happen in an open outcry environment. So I'm pretty set on the fact that both floors will reopen. So that's my call.
What have you been hearing? Obviously, you're out there when you're not talking to me. You're out there talking to the traders, the brokers, and the customers out there who are in the equity space. Equities are where a lot of this high-touch stuff used to live. What are you hearing from them? Or how is this impacting their trading overall? Are they doing different strategies? Are they trading less? How is this impacting the guys who like a lot of the high touch and the equity side, Sean?
They're surviving. I think they're actually trading well. Liquidity providers are doing extremely well. I hear that their BCP or business continuity plans, where the majority of liquidity providers have been putting a tremendous amount of investment in and to prepare for a scenario such as floors closing like they have said that their investments have paid off and they're doing extremely well. But that being said, there's still that floor type of environment that still is needed, and getting those complex transactions is rather difficult. So I think that you're going to definitely see open outcry floors come back at both exchanges. But that's what I'm hearing. Business continuity and the ability to trade the markets has successfully moved, but again, there's still a strong desire to have that open outcry.
I joked on the last show, but it's not really a joke. Yeah, people are running trading desks now from their DSL connection in their basement with their kids crawling all over them. Who would have thought that would be where our liquidity is being sourced right now? But c'est la vie. Those are the times we're living in. This guy gets the award for the best handle of the day. Big Todd. Big Todd wants to know, why is dairy always in the top 5 these days What is causing this volatility? Well, as you might imagine here, Sean, CME breaking down those numbers in their March review, saying the dairy options posted a record ADV of 4,700 contracts. It's not a lot compared to, the S&P or Eurodollars, but for dairy, that's a hell of a lot. So people, you're right. There's a lot of vol. In fact, I mentioned at the top of the show, our old friend Class 3 Milk was in the top five and bottom five this week here with number 4 down 6.16%. So dairy has been very volatile. I don't think either Sean or myself would market ourselves as experts on all things in the fluid milk market and the dairy market, but I think a lot of this obviously is caused by this just massive upheaval we've seen here from the broad pandemic. It's impacting, of course, the livestock side. We've seen the lean hogs. We've seen the cattle just going crazy out there as a result of, demand falling off a cliff. Also seeing restaurants are not open right now. So that's a huge issue out there as well. So that's causing impact on the livestock side, which of course is going to impact the dairy. Of course, we're seeing meat processing plants shutting down now as a result of COVID-19. So all sorts of issues in the distribution and logistics side as well. So all of this is wreaking havoc. And to begin with, even before all this started happening, fluid milk was pretty volatile. In fact, we talk on our Volatility Views show. One of our partners on that show actually is creating a milkshake index to track the volatility. I think it's mostly out of the Australia and Anzac region for now, but they may expand that to the U.S. And that's because dairy is becoming very volatile. So just in general, that asset class has been seeing more volatility creeping in there. And now this pandemic is just setting it on fire out there as a result. And we're seeing the volume and the volatility as a result. Let's look here. Do this one, Sean. Let's go to, it's a weird handle, Turkin stock. This show might win for the weird handles, Sean. Turkin stock wants to know, I am an optimist like Sean. Well, there you go, Sean. A fellow light side guy like you. He says, hoping this coronavirus stops causing damage to our economy. Well, we're with you there, Turkin stock. He goes on to ask, should I bet on a sustained rebound in Russell 2000 by the end of the year? Sean, you were just talking about this a little while ago. You were saying when all this is smoothed out, or at least to the degree that it can be in the near future, you think small caps are going to come roaring back. Turkin stock wants to know, do you think it's going to be by this year, sir?
I wish I could give him that guidance. But we've got history on you can look at this historically as small caps have, as you come out of recessions and things like crises, small caps have outperformed. So as the market improves, you're going to see Russell improve. As you hear small businesses hiring people back and revenues, I mean, all of the big economic indicating numbers will help you make that decision. I obviously can't give you guidance on if the Russell 2000 is going to outperform by the end of the year, but historically there are signs that small caps do outperform under certain conditions. So I hope that helps you with your trading and investing.
And I hope we helped you maybe get a little bit of education, a little bit of analysis, a little bit of just something to do on your days when we're all stuck at home and probably going a little stir crazy and probably worry a little bit about these markets. Again, this show could easily, you guys have asked for it, could easily be 5 hours long. We could hit all the big commodities that are lighting it up. Here we have to kind of just do the top ones. And then, of course, we like to get a lot of you guys on there. So keep those questions, those comments coming. And we like to hear from you guys. So we could, maybe we will do a whole show just based on what you guys want, because you guys have a lot of interesting ideas. We love to hear from you. So keep those questions coming. Before we go, Mr. Sean, if our folks out there, they want to learn more about what's going on in FTSE Russell land, maybe they want to check out all this research. You guys have really aggregated a lot of it around the coronavirus and its impact on equities. Where should they go? What should they do, sir?
FTSERussell.com. All that information's there. And Mark, you put out the links on your site last week. So folks, or you could just email me and I'm happy to point you in the right direction. That's smith@FTSERussell.com. Happy to help you with any and all inquiries and questions.
There you go. FTSERussell.com, FTSERussell.com is the place to go to begin your journey. It's kind of hard to miss that coronavirus hub. It's right there. So if you want a massive depot, just a place to go, a repository for all things coronavirus and their impact on equities, not just on small caps, but a bunch of other things out there. Obviously, FTSE, so they're going to look at those as others as well. So check them out over there. FTSERussell.com is the place to go. And, of course, you know where to find our friends over there in CME land, CMEgroup.com. All this data I was just talking about, breaking it down for a lot of the complexes, you can find all that for yourself, as well as all the great research coming out of Blue and Eric and the rest of the team over there. CMEgroup.com is the place to go, and /TWIFO is where you go. Pick the tires on your own reports. On behalf of Mr. Sean and our friends over there in CME land, and indeed myself, I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in all those questions. Keep them coming. Again, I can foresee an all questions TWIFO coming up because you guys have a lot of them on the brain. And we'll see you back here tomorrow, 1 p.m. Central, 2 p.m. Eastern for volatility views. Then it kicks all off again on Monday with the option block and all that fun stuff, crypto. Then we head right back on into Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.